If you have kids 17 and under, this is one of those updates you do not want to scroll past, because a new child tax credit proposal could mean thousands of dollars back for families if it becomes law. We are talking about as much as $3,600 for older kids, $4,320 for younger kids, and even an extra baby bonus in some cases. And the big reason families are paying attention is this. The proposal says the credit could be fully refundable, which means even families with low income or even no federal income tax liability could still potentially receive the full amount as a refund. So in plain English, this is not just about cutting a tax bill. This could be about real money landing back in a family budget if Congress moves this forward. Source. Let me show you exactly how this works, because the numbers are what make this story so important. Under the proposal highlighted in Senator Cory Booker's Keep Your Pay Act, the child tax credit would rise to $3,600 for each child age 6 through 17 and $4,320 for each child under age 6. On top of that, there would be an additional $2,400 baby bonus in the year a child is born. That means this is not a tiny adjustment. This is a major jump from what many families know today. And yes, that age 17 piece matters, because a lot of parents hear child tax credit and assume the rules stay the same as current law. In this proposal, the language highlighted by Booker says kids 6 to 17 could qualify for $3,600, while younger children could qualify for $4,320. Source. Here's a simple example. If a family has one child who is 8 years old, the proposed child tax credit could be $3,600. If a family has one child who is 3 years old, the proposed credit could be $4,320. Now let's say a family has two kids, one age 4 and one age 9. Under this proposal, that could mean $4,320 for the younger child plus $3,600 for the older child, for a total of $7,920. That is real money. That could help with rent, groceries, childcare, school clothes, car repairs, or just catching up after a hard year. And if a family welcomes a newborn, this next part is where it gets really interesting. In the year that baby is born, the proposal also includes a $2,400 baby bonus. So if a family has a newborn, the total for that child in that birth year could be $4,320 plus the $2,400 bonus, which adds up to $6,720 for that baby alone. Source. Now let's talk about the legislation itself, because context matters here. The Keep Your Pay Act was announced by Senator Cory Booker, and in his release, he says the bill would expand the child tax credit under the American Family Act framework. That matters because the same $3,600, $4,320, and $2,400 baby bonus structure has also been promoted in the American Family Act, introduced by Senators Raphael Warnock and Michael Bennet. So when people ask, who is behind this idea? The clean answer is that Senator Booker is pushing it through the Keep Your Pay Act, and the child credit expansion it points to matches a broader framework that has also been championed by Senators Warnock and Bennet. But here is the part every family needs to hear clearly. This is still a proposal. It is not a finalized benefit. It is not an approved payment schedule. It has not become law yet. So this is a watch this closely moment, not a guaranteed money tomorrow moment. Source. Now let's break down the phrase fully refundable, because this is where a lot of people get confused. Fully refundable simply means that if you qualify, you may still receive the full credit amount, even if you do not owe enough federal income tax to use the credit the normal way. Most people understand a tax credit as something that lowers your tax bill. So if you owe $1,000 in taxes and get a $1,000 credit, your tax bill drops to zero. But a refundable credit can go beyond zero. If your credit is bigger than what you owe, the extra amount can come back to you as a refund. The IRS explains refundable credits as credits you can get as a refund, even if you do not owe any tax. So when lawmakers say fully refundable, they are talking about a design that can reach lower income families, not just households with large tax bills. That is a big difference, and it is one reason proposals like this get so much attention. Source. Here's a simple example using easy math. Let's say a family has one 7-year-old child and qualifies for the proposed $3,600 child tax credit. Now imagine that family owes zero federal income tax after deductions and other credits. Under a non-refundable setup, that family might get little or nothing from that child credit because there is no tax bill left to reduce. But under a fully refundable setup, that family could still potentially receive the full $3,600 as a refund. Now let's do a second example. A family has two children, ages 2 and 10. Under the proposal, that could be $4,320 plus $3,600 for a total of $7,920. If the credit is fully refundable and the family otherwise qualifies, the idea is that they would not lose most of that amount just because their income was low or their tax bill was already zero. That is why fully refundable is such a powerful phrase in these debates. It is about who actually gets helped, not just what the headline number says. Source. And to really understand why families are excited, you have to compare this proposal with current benefits. Right now, the IRS says the child tax credit is worth up to $2,200 per qualifying child, and up to $1,700 of that may be refundable through the additional child tax credit, depending on income. That means current law is only partially refundable, not fully refundable. The IRS also says you generally need at least $2,500 in earned income to qualify for that refundable portion, and a congressional report explains that the refundable amount rises based on a formula equal to 15% of earnings above that threshold, up to the limit. So under current law, many lower-income families do not automatically get the full value. That is exactly why this proposal is getting so much attention, because moving from a $2,200 credit with only $1,700 potentially refundable to a fully refundable $3,600 or $4,320 credit would be a major change for families with children. Source. Let me show you exactly how different that can look in real life. Under current law, imagine a family with one qualifying child and limited earnings. The maximum headline credit may be $2,200, but only up to $1,700 may be refundable, and the refund depends on earnings. Under the proposal, that same family could be looking at $3,600 if the child is age 6 to 17, or $4,320 if the child is under 6, with the promise that it would be fully refundable. So instead of part of the credit being out of reach, the full amount could potentially come back as a refund. And if there is a newborn in the home, that extra $2,400 baby bonus would make the first-year amount even bigger. That is why so many headlines are using words like boost, increase, and bigger payments for families. The jump is not small. For some households, it could mean thousands more than the current credit structure. Source. But this is exactly where you want to stay smart and stay patient. This is new legislation. It is still in proposal form. That means families should stay informed, but they should not make financial decisions as if the money is already approved. No one should be spending expected refunds that have not been enacted yet. No one should assume a deposit date right now, and no one should believe every viral post that makes it sound final. This next part is where it gets really interesting because proposals like this can move fast in the news cycle, but the actual lawmaking process can take time, and the details can change. Amounts can change, eligibility rules can change, refund timing can change. That is why following updates matters so much. If this proposal advances, families who understand the difference between a proposal and a passed law will be in the best position to react quickly and correctly. Source. And I also want to add an important disclaimer here because this matters. This video is general information only. It is not personalized tax advice, legal advice, or a guarantee of benefits. Your actual result could vary based on your filing status, income, earned income, child eligibility, social security number requirements, residency rules, and other factors that apply on a real tax return. The IRS has specific qualification rules for the current child tax credit, and any future law would also come with its own official rules and guidance. So if this proposal moves forward and you want to know what it means for your household, the smartest move is to check official IRS guidance when available and talk with a qualified tax professional if your situation is complicated. Source. So here is the bottom line. The Keep Your Pay Act has put a much larger child tax credit back into the conversation. The proposal highlighted by Senator Cory Booker would raise the credit to $3,600 for kids ages 6 through 17, $4,320 for children under 6, and add a $2,400 baby bonus in the year a child is born. The biggest feature is that it would be fully refundable, which could make a huge difference for families who are usually left with only part of the benefit under current rules. Compared with today's child tax credit of up to $2,200, with only up to $1,700 refundable, this would be a major expansion if it passes. So yes, families should pay attention. Yes, this could become a very big deal. But for now, it is still a proposal, and staying updated is everything. If you want more straight to the point updates on the child tax credit, government benefits, tax refunds, and money news that affects real families, make sure you like this video, subscribe, drop a comment telling me how many kids are in your household, share this with someone who needs to hear it, and check out the other videos on this channel so you do not miss the next update.